Welcome back to the Eric Krown Crypto channel, wishing you a happy and healthy start to this nice new first day of May as we start the macro Sunday and continue on with the long-term analysis. Now, I want to follow up on the thread of analysis that we've been going off of for the past, realistically, almost 2 months now, I do believe, as everything kind of comes to fruition at this current juncture, and there is plenty to be discussing as far as long-term targets on Bitcoin and also major potential opium as well, although I think it is a little bit unlikely. It always needs to go with some sort of identification to give it its due merit. And with that said, I would also humbly request that if you do find this content valuable, if you do find this content in some way useful to your life, please do consider hitting the like button. It actually does quite help. Of course, only do it if you want to do it. And if you don't like it, then you can always dislike it as well at the end of the video. Anyways, other than that, I should let you know that the trade journal features on the Krown Chain application are now live, or I should say further enhanced, as we do allow for significantly more interoperability on this, and there's going to be a lot more coming as well. So with that in mind, keep an eye on that. It is also free in the link description below. And I should also let you know about Instagram. There's a bunch of scammers impersonating my account. I can assure you they're not me. If it is not coming from the Instagram account that is linked in the description below, then it's a fucking scammer. That's all there is to it. That's the only one that I have. Anyways, what else do I have over here? Yep, Bybit, the good old Bybit shill. In fact, I do want to state for the Bybit whole thing, well, I do have an affiliate link in the link description below. Full disclosure with that, of course, it does give you like $3,000 or $4,000 deposit bonus. As always, I want to say that, hey, unless if you already have a working strategy, very, 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 very unwise to jump onto one of these. And I'll actually be releasing a video probably sometime this week about how I go about the old strategy deliberation process, and then how to backtest that, which you can use for yourself if you so desire. All right, sweet. So let's jump into it right now. Let's waste no more time. Let's start off with the higher term timeframes. Again, today's mostly going to be focused on the higher term timeframes. So we're gonna start it off running over here. We got the new monthly closure for, of course, April coming into May, and something very dastardly has happened as we do get the monthly closure below that white moving average right here. This chart that we've been following for a little bit of time now, and by a little bit of time, I mean a lot of time, now coming to fruition as we do see the triple witching, if you will, among many other things of which we're gonna get into. In fact, other things that I think matter a lot more, to be quite frank with you. Although I think that this chart is just simple in a good way and just very easy to understand. Anyways, 3 times in the past for Bitcoin's history, we have seen a monthly MACD cross to the downside, accompanied by also losing the PMAR moving average right here, although not as important, but of significant importance, especially to the more modern times right now, is when that monthly MACD cross happens to the downside, as denoted by, again, this green vertical bar right here. The next closure below that white moving average, going back to our first iteration in September of 2014, was essentially the catalyzation of major downside price action from that number. In this case, you can see that over the next few months, or the next 4 months or so, Bitcoin finds its lows, grinds out those lows for almost a year actually, and then finds its footing alongside that green moving average, which is a 55 exponential moving average, which was, in hindsight, a great bottoming area, and Bitcoin never went lower than that, obviously. Now, of course, we get another iteration over here in June of 2018. The monthly MACD crossed the downside right here, and then Bitcoin closed below that white moving average ever so slightly, actually, just about 4 or 5 months later. And then over the next 3 months, Bitcoin finds its lows again on the green 55 right there, and then rallies back up until we get the same thing over here. Monthly MACD crossed the downside in January of 2020, and then Bitcoin, it closed below the 20 simple on the same stretch that it hit the 55 as well, even worked well below there, as you can see. This one obviously a bit more of a potential black swan, you might call it. And what do we have going on right here? Well, we do have the monthly MACD crossing to the downside, similar to the last 3 iterations. We've already lost the PMAR. That ship sailed long ago. And now we have our first successful closure below that white 20 simple moving average. So what can I essentially say about this? And I want to be very deliberately clear with this, because the market really does, it really feels like most people are probably bearish. Again, that might just be my own echo chamber. I can certainly be wrong on that, but from what I gather, many people in this market are quite bearish. And what's the old saying? When everyone's thinking the same thing, something else happens. So an invalidation for this, or just perhaps a good criteria for me to get mega bullish with targets back up towards $60,000 plus and so on and so forth, and probably just new highs, would be with any sort of a with any sort of a trade back above last month's high, especially a closure on this month above about 40, what is this area right here? About $42,000 or even $41,000 would be good enough for me, to be quite frank. Until then, downside pressure is, more likely, statistically speaking, as we're going to get into soon enough. And for what it's worth, the 55, that green moving average now is coming in just under $25,000. So that would be a relevant target, perhaps for the long term, not happening today or tomorrow, but perhaps over the next few months, as we have seen in the past. To bring this one step further, and something that I put a little bit more weight on, among other things, would be this chart right here. Or should we start off with this chart? So we're actually going to get into that one a little bit later. No. Let's do it right now. Apologies, but that would be the 5-day chart right here. I brought this up too many goddamn times in the past couple months that I've bored the shit out of you, but I think that it deserves recognition yet again, because we are starting to see volatility expansion off of what would be considered extreme lows. So this moving portion right here is the BBWP measuring volatility and then ranking it into like percentile format. Basically, volatility measures the dispersion of returns. So when it gets low, then it is kind of like mathematically programmed to expand, aka those are your breakouts or breakdowns, the violent price action essentially. And this is one of the lowest levels that we've seen over the past couple of years, actually, comparable to what we saw in September of 2020 when it was this low. Volatility, of course, is direction neutral. So the expansion phase from these on average has led to about a 45% move as I've measured these ones out over here on average for the past couple of years, typically finding its final destination within the next about average, again, 40-ish days or so. So in this case, the reason why I'm bringing it up yet again is because we do see our first itchings of expansion off of the lows right here, with the 5-day BBWP trading above the moving average and both of them having a positive slope, contrary to what we saw over here on that last little fake out, which was never confirmed. Now we are about to get, or sorry, actually we just got confirmed last night. Oh, okay, well, it's fucked. So just kidding. But of course, this is one of the charts that has been, keeping us on edge for a while now, especially ever since these late March, early May, or late March, early April highs. Yes, my months are disgusting, as well as my arms right now, man. I worked out with this guy from the community yesterday, and this guy just absolutely fucking tore me to shreds. Like, I can barely move them. I tried touching my face earlier. It just locks up. It's insane. Anyways, you don't give a fuck about that. You give a fuck probably about this. So let me get back on the topic right here, and let's get into it with the 5-day stochastic momentum oscillator. So this has been essentially giving us a bias that downside price action is a lot more likely, among other things as well. This chart I actually I supersede much above the prior MACD chart that we just looked at, and this one has been, giving a good, warning for a while now, and now starting to come into fruition. So we're getting our first official tick to the upside right there. I'd like to see one more closure with the BBWP having positive slope, and then as long as this condition is met over here with the 5-day stochastic momentum, then I would say that the downside probabilities of this playing out, the probabilities of this playing out with further downside price action, traditionally speaking, about 45% move from the expansion point, is very likely. The reason why is because all of the last ones in the past couple of years have gone the correct direction on the 5-day stochastic momentum, and this we can forecast the price action that would be needed to close above in order to force this back the other way, thus giving the Bulas the balls back in their court, and that would now be 44,250. So as long as Bitcoin's below there, heavy pressure down. Does mean that Bitcoin can have rallies in between there. Of course, I wouldn't even mind a rally to like $40,000 or $41,000, get everyone bullish yet again, and then dump it in our faces, or dump it on my chest, because that would feel really, really good. But overall, again, as long as that criteria is met, I do think that there is a lot more risk to the downside than there is to the upside in a more sincere tone. And technically speaking, if we are going to take the expansion point from where we see this start to turn up on the 5-day BBWP, it would imply a price target somewhere down around about $24,000, maybe $25,000, which, by the way, is directly in line with that green 55 right here. Yes, you can get wicks below, but we just don't want to see opens and closures below that. That's where things really start to fall apart. So for right now, yes, I still remain bearish. I still remain more likely to look to the downside. I expect rallies in between. Again, rallies can come even up to like $40,000 to $41,000, but as long as Bitcoin is below last month's high, I do look at this as extremely likely to play out those moves with stops along the way. Very likely bounces, probably in the $34,000 to $35,000 range, or more like 33 to 34, and then very, very likely like 29 to 31 or so. It's going to be a nice area as well. Yeah, okay, and that would also imply, again, anything even above like $44,500, I would call a mega macro bear trap. humongous targets up to the upside, and that would, be what I suspect most people are looking for. Anyways, to further washboard you with some more non-hopium information over here, let's go over to this next chart. This is the fundamentals chart. I typically only look at this, or I really only look at this once a month on the monthly closure. And what do we have? Well, or what is the focus on this chart? The focus on this chart is these green vertical bars. These green vertical bars correlate to slope changes at extremes for the accumulation distribution indicator, or aka the nut delta indicator. In this case right here, let me actually get rid of that. That is not, it doesn't matter. In this case right here, all of these slope changes have essentially been accompanied by macro trend continuation or reversal, meaning that when you get, these ones right here, or basically all these green vertical bars have been macro reversals. And I'm correlating it to the slope changes at extremes for the accumulation distribution indicator. As we came into this next month, we get a new tick, and the tick is down. So we have 2 successful ticks down now. Again, this is not even at extreme anyway, so it was more likely to continue downside to begin with, and that does suggest continual downside pressure from this perspective. No necessary target in mind, but it would suggest that, hey, it's not wise to be looking for a macro low until we at least see a neutral slope, like just a horizontal slope essentially. And for right now, that is continuing with the downside pressure right there. In fact, even increased the curvature by a slight degree coming into this coming into this new month of May right here. Anyways, what else do we want to talk about? All right, let's get into this one as well. Here we go. This is the daily one, the daily volatility versus stochastic that we've been referencing as well right here. Again, these things take time to play out, but as we've identified several times now, especially even in the last month or so, you've seen this many times play out, and I believe that we're going to see it again. Anyways, it's similar to the 5-day chart, except this one obviously being a daily, not as powerful, but also consistent with it. And we do see of the last 10 iterations, or I guess we now have 11, on average, volatility expansion off of these extreme lows has led to on average, about a 20% move to the upside or the downside from that last major higher low. For the last 5 or so of these iterations, the first tick on that volatility expansion essentially set in the direction, which is why we said over here that, hey, probably likely to head to the downside when Bitcoin got its last move from about 40,500 down to, basically where we're at right now, actually. But ultimately, I'll just kind of run you through this for a second. You can see on this expansion right here, again, the green vertical bars, that first move down gets follow through. On this one over here, opposite, but same thing. First move up and gets follow through. Over here, first move down, follow through. Over here, first move up, follow through, first move down, follow through, so on and so forth. And then on top of that, the daily stochastic has gotten the correct direction off of this for that next 20-ish or so % move over the course of, let's say, on average about a couple weeks in comparison to the 5-day, which has an average of just over 40 days. 8 out of 10 times. So, pretty damn good. Not perfect, obviously. Nothing is intended to be perfect. These are only statistics and probabilities at the end of the day. But as we do see over here, we can correctly assess, or very likely correctly assess, as we have been looking at, that as long as the daily stochastic momentum is angled down, which it is, then pressure is yet again to the downside, even as long as it's below the bearish control zone. So again, not always going to be perfect in that regard, as Elsa wakes up coming in from a nice Finnish holiday, and we do see that downside pressure on the daily will continue as long as Bitcoin's below 38,500. So again, rallies up there are fine, but as long as Bitcoin is closing dailies below there, I do expect downside continuation on a daily time frame before a relief rally. And we'll talk about potential relief rally areas next, and maybe even hopium areas as well, if you will. But for right now, this I think is kind of rather damning on its own, alongside the 5-day chart that we referenced over here. This one obviously a lot more powerful, being that it is a higher term time frame. And then of course, if we go to the monthly stochastic momentum, which we identified yesterday, yes, downside pressure remains. Downside pressure remains, as Bitcoin did close well below $62,000. Now the number needed, the magical number needed in order to force this baby back up, is $55,000. So I would go as far to say, again, if Bitcoin even trades this month above like 42 or especially $44,000, we're very likely going to see an explosive move back up towards the $60,000 regions and plus. That's the hopium or it's not necessarily hoping, it's just like if that happened, I look at this as just one mega macro bear trap. And this move was, perfect to get, most people in this market extremely bearish and then run it the other way. Definitely possible, not very probable, statistically speaking, until at minimum Bitcoin's back above like 42, let's say. So that is also to say that if we were to see a rally in between here, which I'm not saying that we are going to, but if we did to like $41,000, let's say, I would just be looking at that as probably an entry, just personally speaking. Of course, it's not financial advice, but that would be basically around the white 20 simple, as one of our fellows in the Discord earlier today correctly identified. But then again, you have to make a plan around that. So, maybe it's relevant to you, maybe it's not relevant to you. I don't know. It's not really relevant to me. I don't trade those higher term timeframes. I don't like holding positions overnight. And if I'm looking at the lower term timeframes right here, honestly, still looks like pressure down to me, even with this. So let's go and check out the underlying market dynamics. Global open interest, I'm still looking for the unravel to 10, 11 billion minimum before I start to look for like major bounces, maybe even reversals. And then the funny rates, the daily fucking funny rates, they're positive ever so slightly. On the short term, on the hourly, getting a little bit negative right there, negative 0.06%. So a little bit more on the short-term hopium side, I suppose. If we go and reference stochastic momentum on the shorter-term timeframes, it really wouldn't take too much to get a bounce, to be fair. On a 4-hour, we will see 4-hour stochastic momentum turn up above 37,850. But again, I really want to focus this video on the higher-term timeframes. 6-hour turns up above 38,500. So hey, back above 38,500. That would also negate the daily signal. So there's something to be aware of as well. 12-hour turns up above 39,300, so a little bit further away. And the other lower-term timeframes are already like very critical over here. 3 hours showing 37.5 and hourly showing upside as long as you're above 37.8 or so. All of these look, rather weak to me. So it looks to me like a corrected move. We might have even already seen the high of it, but if Bitcoin wanted to take another leg up, probably looking somewhere around 38.5. If Bitcoin breaks above that region, probably looking somewhere around 39.5. It's kind of how I look at the range resolutions. Until then, Bitcoin's bouncing off the same area that we've had in here for like half a year now. It feels like maybe not half a year, but more like about 3-4 months now, coming in from the March and February lows. So that would be at the bottom at about $37,000. Bitcoin's kind of already getting its last little pity bounce there, in my opinion. And if Bitcoin does close below that region and breaks it, I would be looking for a nice move down towards 30, somewhere between about let's just call it around $34,000, give or take, and very likely a bounce there. And then, could a potential macro bear trap happen, and then Bitcoin pops back up? I think if you are going to get something like that, or if Bitcoin is going to get something like that, more accurately said, that's probably where it comes from. In my opinion, the biggest source of hopium would be something like this. By the way, that hidden bearish divergence on the weekly and 5-day, like, I mean, that's all really we had to look at, months ago, to be fair. But I do believe that the biggest hopium, or the most reasonable hopium, would be something like this, where it comes down to that $33,000 to $34,000 region, bounces back up, puts in a bit of a higher low right there, plays out a range between this area and this area. And then over the course of the next half year to, 3 months to 6 months, you probably see something like that, right? With Bitcoin popping back above 44.5. Or just 44 would be good enough for me anyways, to get mega macro bullish. And at that point, big targets up. Until then, that is hopium. I think that's the most reasonable hopium, if that is going to happen at all. If we're going off statistics and probabilities, the most likely thing to happen is, bounce along the way. Again, probably going to take some time, on average about a little over a month. Technically speaking, probably somewhere down around here. Weekly 200 simple, also hovering in the 23s or low 20s now. So yeah. Anything else that I want to get onto? I suppose the last of the last sources of hopium I could come up with would be the Dixie chart. Obviously, Dixie is mega macro bullish, but in the short term, it has hit, short term on a monthly, has hit, a long-term area, right, at this 104, almost 104 region, more like 103.5. Probably opens this month on a bit of a pullback, so that is why I do think it's relevant to be aware of where the hopium areas are. Elsie, your eggs are ready over there, by the way, just so you know. She's got like sunglasses on for whatever God known reason. But yeah, long term, I have to be very, very bullish on this, especially as long as it's about $97. But it could easily pull back in the next month and a half. Even a little bit below 100, which probably does give general markets a reprieve. But again, that likely is just well, a higher low for Dixie. Also, Tether dominance, which I suspect is probably more bullish. Yep, it is quite bullish right there. Again, probably looking for a pullback to open this month up. So short term, you know, if Bitcoin does start to close above 38.5, I do think that we will see a rally, maybe even just north of $40,000 but that still doesn't necessarily do it, you know, as far as long term goes. Long term, again, this, you know, probably does move up from here. If you're wondering why I'm talking about this, because the general trend of this has correlated very, very well with the inverse trend of Bitcoin. I know that people have something to say about that with like, but Krown, don't you know that Tether is losing its market? I don't fucking care. As long as that relationship works, I'm going to continue to fucking use it. That's how my analysis goes. You know, to each their own, obviously. But in this case, I think that's a good place to kind of leave this one off. Again, I kind of want to avoid the short-term time frames. You know, anything below, especially 41, is completely irrelevant in my opinion as far as long-term goes. And above 42, I start to entertain the possibility that yes, we might indeed be seeing a macro bear trap, and above 44, fully confirmed for myself. Until then, risk remains lower, and those targets in mind with those bounce areas in mind. Hopefully that was helpful, and hopefully I'll see you soon as well. Take care.